Hey traders, welcome back to my channel. In today's video, we're looking at the 8-day EMA or the 8-day exponential moving average. So I kind of go over EMAs briefly, like in a lot of my videos, but I wanted to start kind of dedicating and explaining each specific one in a bit more detail. So it's not going to be like a long, complex video or anything. You guys know I like to keep it really short and sweet, but it will kind of help you guys get a better understanding of each EMA as we use them. Just so those of you who don't know me know, I don't trade based on EMAs or any indicators. I use price action to enter my trade, absolutely, but I do incorporate EMAs as a way to spot entry points or confirm entry points, sorry. So looking at this chart, we're looking at the euro yen on the 15-minute, which we can see has been extremely bullish. Now you can just see that looking at the chart, looking at the candle direction here. But another indicator that will help you see kind of how strong your trend is using the 50 EMA, which I do have plotted as well down here. Okay, so this 50 EMA tells us overall we have a really bullish trend. And something to note as well, and I have spoke about this in videos, but pay attention to the difference or the space between where price is and where that 50 EMA is as well. The more space between these two areas, the stronger your trend. Okay. Now, if we look at the 8-day EMA, so that's like kind of this blue one. Let me change that, guys, because I hate having two blue. We'll make this one like a red. Yeah, that's fine. Pink. Okay, so looking at the 8 EMA, you can tell it never really strays far from price, right? Like you're not going to really get a strong indication of how strong your trend is by looking at this 8 EMA. But what it will do is give you really precise entry points, okay? So once we start trending strongly, here's a tip. When you're trading the 8-day EMA, you don't want to start trading it until you already have a strong trend. So once you have these, spaces between price and that 50 EMA or the 200 EMA, whatever you want to use, once you have a lot of momentum coming out of a zone, which, here, sorry guys, I'm moving my mic, so that might have sounded annoying. If we look here, price broke this zone. And kind of that's where we saw the initial breakout and the start of this really strong trend, right? So you don't want to take it you don't want to use the 8 EMA at levels of consolidation or when we're not already trending strongly. I can't speak today, you guys. I keep fumbling over my words. Where you do want to use it is when you've already had that breakout, right? And you're looking for either re-entry or a confirmed entry. So once we've broken that area and you've used your other, price action and other whatever signals work best for you, once you're already trending strongly and you want to get in a trade, that's when we can use it. And actually, I do want to take note of what's happening right now as we speak. I'm not trading right now. You guys, I'm not going to do any live trading or anything today, but this would be a really interesting trade to look at. So what I would do if I were looking at this trade, so we're on the 15-minute chart, I would look at this area and see if we're at a level of significance, meaning are we at a resistance or support? And we're going to look at that in a minute when I zoom out. But basically what I wanted to kind of reiterate here is that you're using the 8 EMA. You want to wait for price to break or reject that area, and you can get a nice precise entry. Remember that you're not just blindly using it. We need to take into consideration, momentum and what level we're at, if we're at a key level, if we're at structure, and all of those things. So it's just really giving you a more precise entry. And once you're already trending, once you've already got this strong momentum, it can give you great reentry points like we saw around here, even here as well, kind of as you're rejecting that EMA. It works as a dynamic support, right? So I do want to zoom out now, just looking at that example here, and I want to see if we're at a level of significance. So once we zoom out, we get a whole other picture, right? Because we can now see We've actually been quite bearish since, let's see, when was this? October 20th. So we've actually had a little push to the downside, and this could very well be a pullback, right? That we're seeing now. We're seeing a lot of rejection right here. That's of interest to me. Next, what I would do is plot a zone here, kind of where we're seeing that rejection. I'm using this engulfing candle right there. It's not a true engulfing, but it's kind of good enough for what I want to do. And then I'm going to extend this level outward, and we can go back and see if price has respected it in the past. I know it's getting a little bit, okay. And I can see here we've had really strong rejection. I can see here we had strong rejection. I can see here we had strong rejection. And here again, this is a very significant level. Price is really, really well respecting it. So what this would then tell me on the 15-minute chart is we very well may, let's go back to that 15-minute chart. This is actually a really nice entry. So I want you guys to take note of this. This is an excellent entry point here. You can place your stop loss, above this level of significance. So I'd be placing it like 124,475, and just ride that out. You can even trail your stop loss because this is likely just a pullback that we're seeing. You could trail your stop and get a beautiful entry here. And that's a prime example of how, and it's kind of funny that it worked out this way because I was not looking for entry on the euro yen, but yeah, that's exactly how I would utilize this. So that's awesome. And it's, again, just giving you that really precise entry point, right? It would be better like when we get a break of this 50 EMA, and then if we could get a cross, that would be even better. What I mean by that, I'm just going to draw it out so it's more simple. If this were to follow downward and this were to come downward and we get a cross, this will give you, it's not going to be as precise of an entry. This, we have our key level here, right? So this is your best entry. You're always wanting to use structure or price action as your number one. Indicators should never be your number one go-to. Indicators just kind of give us confirmation and added confluence. So this would definitely be your best entry, and this would be a more low risk entry, right? Because we've already seen the movement, we have double confirmation. You're not going to get as strong of a risk reward entering down here when that cross eventually does happen, but it'll certainly be a little bit less risky. These are just my opinions. Of course, this is just how I like to use it. If you have a way that you like to use it, feel free to comment that below. Let me just see. I don't want this video to be too short. See if we can get another example. So I do like to use the 15-minute chart for entry. That's just how I do it. Again, if you don't like to do it that way, that's absolutely fine. Here's something to note too, guys. When this is going right through price, okay, and we actually saw that happen today. I was just watching that before this kind of happened. See how this is, the 8 EMA is just like kind of moving through price, and you can see it happening here. It's kind of just moving right throughout where price is consolidating. You don't want to ever enter when that's happening. You want a nice strong bodied candle going away from that level. So like this would be a good example here, but I'd like something with a little bit more, hang on. Okay, so here we can see we've broken structure, right? Again, you really don't want to be entering until you've got a nice strong trend forming or stronger trend forming. Obviously, this isn't a super strong trend, but you can see as we gain momentum, price is going to respect the 8 EMA a lot better. So there are many points if you're a day trader or a scalper where you can get in, okay? This isn't going to work for a swing trader because we get a reversal shortly after at a significant level, whatever this resistance is there. You just plot that in so you know what I'm talking about. But as a day trader or a swing trader, you can certainly catch pips up along this trend here, right? We've broken structure, which is this 4-hour zone we've got plotted. We have strong momentum going. You can get in and definitely catch a decent entry depending on your trading style. So that's all. I think I'm going to leave it there, guys. I don't want to keep kind of going over the same things. And for some reason, my words just aren't working today. If you have any questions about this, let me know in the comments below. This is, again, just my opinion. It's just how I like to use it. You definitely don't have to use the 8 EMA this way. I'm interested to see what you guys think in the comments below. I am going to link my funding program in the comments as usual. If you have any questions about that, I will be checking all of my comments throughout the day tomorrow. So I'll get back with you on any questions you have. And yeah, I think that's it, guys. I'll see you guys in the next video.